Hello and welcome to the 1895 podcast with me, Thomas D.
And me, Rob Cockerell.
Rob, back in the studio today, recording this fresh episode, and we're covering a big story here, but I think I'm getting a slight sense of deja vu with this story in front of me.
You could be forgiven, for thinking that, Tom. It is a bit of a breaking news pod, if anything, but yeah, we have been here, haven't we?
We've definitely been here before, just a month, 2 months ago, perhaps.
Yeah, I think maybe I said it would go quiet, and
you did say it would go quiet, and you said chart would disappear.
Go to ground is probably the sort of terminology.
A few months, but here we are today, covering the story of Chart Industries terminating that Flowserve merger, which we discussed back then, and they have now confirmed a Baker Hughes buyout. Big news in the industry.
It's huge news. It's really trended on the newswires generally, but also at gasworld.com since that story broke. It's been everywhere, isn't it? I think that was Tuesday. Pretty much caught everyone by surprise, I have to say. And I think even those within the respective companies, I think, have probably been caught a little bit off guard by that. We should probably set the scene in terms of why it's deja vu and what happened in the first place if we roll the story back just a few weeks, 6 weeks, 8 weeks. Yeah,
so if we rewind to June 4th, we published a story on the gasworld website of Chart and Flowserve to merge in a $19 billion deal. This was a major merger which was expected to close in Q4 of this year.
A merger of equals. It was titled.
There was going to be a name change. There was going to be a change in leadership. Of course, Gilivenko was going to step aside as the CEO of Chart.
Step up to become chair, I believe, of that combined company, yes.
Yeah, and it seemed as good as done back then, didn't it?
Yeah, there was a lot of value proposition to it. I mean, it offered to merge Flowserve's expertise in cryogenic valves and hydrogen fueling systems with Chart's experience in handling gases and liquids, not just in industrial gas markets, but the clean energy markets too, increasingly so, in fact, and including a wide range of end markets such as LNG, nuclear and chemicals. So there were a lot of synergies with that deal, a lot of annual cost savings, I believe they'd identified, and revenue upsides as well.
Yeah, and we discussed this exact story with our editors earlier this year, and that's when we said, look, things are going to go quite quiet there. We're not going to hear too much out of Chart until this is a done deal and that the name has been changed, there's been a rebranding, and everything's up and running again. But
yeah, that was very much the case as well. That we did expect all parties to go to ground. I mean, listeners, for their benefit, we have very good relations with Chart Industries, for example, and the comms team and those within the company. And we know that things, inevitably, they have to go quiet during any period of business like that on such a huge transaction as well. And we did have an interview planned where we were going to sit down with Gilivenko to discuss all of the ins and outs of that deal and what it meant going forward. So we were quite well placed originally, and that's why we were confident things would go quiet for a few weeks until such time that there was a big step forward. And now, this week, we have a big step backwards to go forwards.
I mean, fast forward to, as you say, Tuesday morning, July 29th, we reported that there were reports that Baker Hughes were going to make a counter bid for Chart Industries. That was reported a $13.6 billion bid, and then just a few hours later,
it was confirmed.
That was confirmed. The Flowserve merger was terminated at a cost.
Considerable
cost, but one that Chart are happy with, and I imagine Flowserve too are going to be happy with that.
Well, certainly the rhetoric, I wrote a bit about this in a column on our website. The rhetoric from Flowserve naturally is very much, we didn't want to renegotiate, we didn't want to revise our offer because we're committed to financial discipline, I believe was the wording, and they had that termination payment in their favour, I guess.
I've got the figure here: 266 million termination payment in Flowserve's favour.
Yeah, exactly. So they've got that in the back pocket as a result. Yeah, I mean, it was a huge development. It still feels quite seismic. I think a lot of the reaction that we've seen and across our social channels is pretty big. It's caught everyone by surprise. And from what I understand, clearly there were at least two suitors here for Chart Industries with Flowserve and Baker Hughes, but I understand there were many more as well. So very much a company in demand, yeah.
And notably, this offer is lower, $13.6 billion, than the Flowserve proposed merger of $19 billion. But this has been opted for because of Chart's equity in the new company, I guess.
Yeah, I think there's a number of reasons. Jelevanko did cite those in the official press release as well. Look, it's the immediate kind of cash out value that is generated. I think it was the deal values Chart's equity at $210 per share, a 22% premium on its market capitalization, its market cap. At that point, I think shares did rise subsequently, but
16.5%.
Exactly. So still a healthy premium, we might say. And that just means that, look, Chart shareholders across the board will all prosper in the short term. It's the immediate value or gain that you get from that kind of acquisition. But I think it's also the bigger picture, isn't it? Clearly, Chart Industries becomes part of Baker Hughes. A $46 billion oilfield services group with a global footprint, and all the synergies and the opportunities that brings across the energy and the industrials landscape. So yeah, a lot of upsides for both parties, clearly, but for Chart, that you can see why this has come about.
And talking of Baker Hughes being, of course, very happy with this deal, that their CEO, Lorenzo Simonelli, has described this buyout as a milestone for Baker Hughes and calling it a testament to their financial execution and strategic focus as an energy and industrial technology company. So where do you think this positions Baker Hughes within our industry now?
I think it throws up a wider question, which I'll perhaps come back to later. But I think this is all about how two movements, two sectors, if you will, are coming together. We've got this whole decarbonisation and sustainability play. We've got, existing oil and gases and fossil fuel resources. And then we've got the technology innovators and all the people that know how to handle these molecules and the technologies. They provide the technologies for it. So I think it for me, it's potentially part of a growing trend that we see, but it positions Baker Hughes perfectly in the industrials and the energy sectors, as I said. And for Chart, it should open up whole new opportunities that they perhaps weren't privy to before.
And Baker Hughes have been making quite a few movements, perhaps in the build-up or anticipation to such moves like this. They sold off their precision sensors and instrumentation product line with Druck and Panametrics all going away from Baker Hughes. So I guess this plays a part in it too.
It does, yeah. They've been on a trail of bolt-on acquisitions, from what we understand, under the leadership of Lorenzo Simonelli, as you said. They've clearly been. They must have been looking at this for a while. These things don't just come out of thin air. So, yeah, I'd imagine it's been part of their strategy for some time. And we know, of course, from the Chart Industries side, which we know much better. Chart's been on an absolute transformation since Jelevanko became CEO in June 2018, I want to say. They've taken on acquisitions in key markets. They have had the decisive divestment of non-core assets. So we've seen a few of those go. They've expanded their activities in core areas under Jill Evanko, and they had that huge purchase of Howden a couple of years ago now, the $4.4 billion deal for that business in air and gas handling products and services. And I think it's quite interesting, under Jill Evanko's leadership, they've positioned Chart very prominently in LNG and hydrogen. It was already an innovator and deeply invested in those markets, but you've seen Chart Industries join the Hydrogen Council, a huge movement on the hydrogen side of this energy transformation, and also IH2A, the Indian Hydrogen Alliance, I believe, and very well positioned in LNG, of course, made a lot of different investments there. So they've been blazing a trail as well under Evanko's leadership.
And blazing a trail in clean energy when it seems that, well, majors are perhaps turning away from clean energies. We've seen movement within Air Products, for example, of not focusing on hydrogen so much anymore, more focusing on the key businesses, I guess. So are Chart positioning themselves so that they can fill this gap, I suppose? I'm
not so sure they're doing that. I mean, they're on it's a different end of the value chain, as we might say. It's more of the handling and the delivery of those products and filling all of those niches. So I'm not so sure it's filling the role of the majors, but I think there is a talking track where Baker Hughes and other bigger energy players are concerned. Perhaps we'll get to that in just a moment, Tom.
So a bit of a break there, Rob, but am I right in saying that the majors here are positioning themselves away from clean energy, I guess?
I don't think you are, actually. It's difficult because that is how it could look. I think exactly what, like you said before the break with the Air Products examples, it felt like Air Products perhaps overreached a little bit into some of those mega projects in hydrogen in particular, or green hydrogen, and then we've seen that kind of retrenchment. We've talked a lot about what's happened at Air Products in the boardroom and its strategic direction in the first half of 2025, and they've been very much unpicking all of that. I think it could be a misconception that the majors are turning their backs. I don't think that's the case at all, and I'm sure if you spoke to Air Liquide and Linde and Air Products, in fact, they would not, they would definitively dismiss that notion. I think what we are seeing, however, is an element of caution, and maybe it's not just the majors in this industry, it's the majors across the board have kind of stepped back from the cliff edge slightly, and are trying to weigh up where we do go with decarbonisation, what shades of hydrogen. Ultimately, we're talking low carbon hydrogen these days. And I think it's that terminology we see in the industrial gases business about, not in our wheelhouse, or it is in our wheelhouse, and our model of production and delivery. I think it's all about assessing the business case, assessing the wheelhouse, and then the company's aligning with that business need. So I don't think anybody's stepping away from clean energy. It's probably the opposite, but it's about better fine-tuning where that play is. We talked a bit about this, didn't we, with the editors, particularly Charlie Curry from H2View was talking about the questions facing the industrial gas majors and the hydrogen sector as a whole, and how they make this happen. So I think it's more a case of, look, they're not stepping back, but they're fine-tuning the opportunity and identifying where the need is, and then stepping up to that accordingly. The big question I wanted to come back to was whether we will see more deals like this Baker Hughes and Chart Industries coming together. As I wrote in my column, my final thought on that was, are we going to see more of this? Are these two sectors on a path towards greater symbiosis, if you like? Because there are long-standing overlaps between your industrial gas majors of this world that are the pioneers in hydrogen, know it like nobody else, the molecule and the production, and then of course the energy majors, your BPs, your Totals, your Shells, even the likes of Baker Hughes, the oil field services group. It feels like there's a middle ground that they're all going to come together on, and those overlaps are going to become more pronounced. So it's a big question. Will we see more acquisitions or mergers taking place that might actually, on the face of it, be a little bit uncomfortable reading at times for the traditionalists in the industrial gases business? Perhaps so. That could be what happens next.
Well, we'll be keeping an eye on it at Gasworld. So what next for this merger? What's the next story that's going to be appearing on the Gasworld website on this Baker Hughes and Chart Industries front?
Well, I'd hate to be proven wrong again, as I was a couple of weeks ago, but I do think this may go a bit quiet now for a few weeks while this transaction plays out. We'll, of course, be pushing for all of the inside track as much as possible. But it has been, we have seen a few other stories in the news, haven't we? With some mergers and acquisitions activity, not on this sort of scale, unfortunately.
Yeah, so one of the stories here that I've pulled up in front of me from June 10th of this year was Honeywell completing the $2.16 billion purchase of Sundyne. So this is the US industrial tech firm Honeywell acquiring the global industrial pump manufacturer Sundyne. We've seen quite a bit of movement from Honeywell over the last couple of years, and this just broadens their product portfolio, I guess, doesn't it?
It does indeed, yeah. Interesting deal, that one. Quite a big price tag attached as well, so there must be a fair bit of value attached to that. And another company much more in our space, much closer to home, of course, Nippon Sanso Group, or Nippon Sanso Holdings Corporation. They've been in the news as well with completing the acquisition of Coregas, Blacksmith Jacks and Coregas New Zealand, which operate under industrial gas businesses in Australia and New Zealand under the umbrella of Wesfarmers. So that one was completed 2nd of July. We knew that was out there in the mix, of course, but yeah. Essentially, the Coregas Group has become a wholly owned subsidiary of NSHD. And
these M&As, I feel like we're seeing them popping up a lot more on the Gasworld website and the H2View website. Of course, they're always populating on there. I guess that comes back to an earlier point of, is this now just the general direction of travel?
I think it goes in cycles. I think certainly on the H2View side, that green hydrogen side and low carbon hydrogen side, yes, that's to be expected. I think we discussed that with Charlie in that episode, the editor's special, with the way hydrogen is finding its feet at the moment and the nascency of the green hydrogen side. After the bubble burst, if some call it that, we were always going to see some companies go to the wall, others consolidate, other big companies come in and pick up the IP of those that have fallen by the wayside. And then, of course, you still see people coming together and reforming as well. So there's a lot going on in M&A and hydrogen, naturally. It's still finding its feet. On the industrial gas side, I think it goes in waves. We've seen periods before where there are lower than hoped for organic growth rates, and then mergers and acquisitions are a form of inorganic growth. It's a way of buying growth and making it immediately accretive to your business. So I think it goes in waves, but certainly in the case of Nippon, for example, Nippon Sanso, we've seen the company, we know it's got big global ambitions and it's been branching out beyond its domestic markets in the last 5 to 10 years in particular. We saw the formation of Nippon Gases Europe, of course, big deal. And I think this is all consistent with its global strategy. So they've been quite prolific, in recent years. And I think the Chart Industries deal with Baker Hughes, we may see more of those, as I said. They're hard to predict, but we may see them coming a bit out of the left field.
Sure, and we'll be keeping an eye on all of them. Rob, thanks for joining me at such short notice, I guess, but this was an important story for us to cover here on the podcast, wasn't it? And listeners can get full full analysis and the full stories on the Gasworld website too, can't they?
They can indeed, yeah. Go to gasworld.com for all of those. And we'll keep bringing the sort of emergency pods.
Yeah, when we can. Listeners, do be sure to like, follow and share the 1895 podcast, and we'll be back again next time.